But Matt Orton is joining in. He's Head of Advisory Solutions and Market Strategy and Chief Market Strategist at Raymond James Investment Management. Matt, very good morning here from Mumbai. We always love our conversations.
Morning.
Are you able to find any method to the madness when it comes to tariffs?
It can be difficult sometimes. At least I think what we're getting today is relatively expected, in the vein that we knew we were not going to just get a complete cessation of tariffs. And I think if there's any silver lining in what it is we're seeing, it's that a lot of the what ifs with respect to the worst case scenarios are at least being taken off the table. And the tariff imposition that we're getting on August 1st doesn't preclude future deals either. So you look at a country like in India, where you know there are advanced tariff negotiations taking place. The tariffs of 25% is really more of a starting point of, okay, here's where we are now, but we're trying to get those levels back down to something, hopefully maybe around the 15% level, which can be more favorable than some other countries. So I think if anything, we're getting a little bit more certainty. We're learning where that baseline rate's going to be. I think the market was expecting something around 10%. And it's also not a surprise that Trump's trying to get rid of tariff cheaters as well, which is all of this, the moving tariffs from one country, trying to ship from other countries and get around what he's trying to do. So it's going to be interesting to see how things unfold going forward. But those countries that don't want to negotiate, or get on the bad side of Donald Trump, like Canada, for example, there could be more pain to come in the short term.
Take a look at the flashes on the bottom of the screen. This is an update coming through as we speak. The baseline tariff of 10% is going to continue till the 7th of August. I'm interpreting that to say that the 25% tariff will only take place on the 7th of August, which means that it's a bit of a reprieve. It's I wonder if something could happen in the next few days.
That's the point, Alex.
Yeah,
that's the point.
It's an extension.
It's an extension, and you would expect that this extension is happening because there are talks going on. Like we said, right, in 48 hours, if we can take a U-turn and give Mexico a 90-day reprieve, there's no saying what will happen in India's case as well. So I think that is what you expect. Now, whether it happens or not is a separate case.
Yeah, so it's one more week, and in the context of things moving as fast as they have been, that's quite a lot of time, Matt. You could expect a mini deal, as we've been calling it here, and you could see what you were just saying about a lower tariff. What do you make of that, though? Is this something that is par for the course now? Everybody is looking through and saying, look, those initial tariffs, they seem to be a little bit of bluster, a little bit of saber rattling.
It is, but they're also here to stay in some way, shape, or form. And no matter where you fall on the economic spectrum in terms of how damaging you think they are, or whether you think they're going to help in the end, they're here to stay. And I think the key is, and I want to take a step back from all of this too, because this is really important and something I try and remind clients of. And it's especially important because we're in earnings season. And when you look at where we are in the market today, as you think about how these tariffs might impact overall economies aren't necessarily the markets themselves either. And I think with the Fed, with tariffs, with a lot of volatility happening at the macro level, we can lose sight of what's happening at the micro level. And I think one of the reasons why you're seeing the US start to resume outperformance over the rest of the world is because you're seeing not necessarily a reacceleration, but you're seeing continued strength on the earnings front, not only from the hyperscaler companies, or at least most of the hyperscalers. Amazon's numbers were good. They just weren't good enough for where the market expectations were. But in general, the numbers are good. CapEx investments are fantastic. Earnings breadth is increasing. You're seeing good beats be very, very strongly rewarded. And I think you're not seeing that strength of earnings across the rest of the world. And that's why you're starting to see some of the big gains that so many of their markets had experienced up to this point start to settle down just a little bit. I don't think tariffs are the reason we're going to see that earnings growth stop. I think it will reaccelerate, especially as we have more macro clarity, because companies internationally now have the ability to properly guide and set expectations with respect to where profits and margins are going to be. So I would expect going forward that while US outperformance could continue in the short term, especially for those companies associated with the AI trade, there's so many other companies in India, other emerging markets, and other international developed markets that aren't necessarily exposed to tariffs, that have very vibrant domestic markets that are also tied to these themes. So look there as opposed to the macro.
On that note, let me ask you a specific question on India. I was reading your note, and what you said is that owning the index currently from an FII perspective is challenging. And what you're waiting for is the next positive catalyst to take that call. I'm guessing that a lot of other foreign institutional investors will be thinking the same thing. We've seen 9 straight sessions of selling and quite a considerable amount of selling by foreign institutions. What is that next positive catalyst?
So it's a great point. And I'm in New York City right now meeting with other institutional investors and clients discussing a lot of these same things. And I think at least where I fall and where I think some of the other investors fall is the catalyst is going to be next earnings season, and where we think in between now and then that companies are starting to move their guidance. Are we starting to see what you want for that reacceleration in earnings? I think if you can maybe see an inflection with respect to what's happening in IT services, where in India in particular, earnings haven't been inspiring, but maybe we're going to start seeing the bottom, especially if there's a little bit more macro clarity. Can some of the big behemoths that have printed excellent earnings, some of the companies we've talked about a lot in the past on the financial side, on the bank side, on automobiles that have vibrant domestic markets, can they continue and accelerate higher with respect to their earnings and margin growth stories? I think the answer is yes, but I think a lot of foreign investors want proof before they put their money to work because they're getting good returns in the US right now.
Because you look so closely at Indian equity, Matt, what are you liking right now?
So right now, obviously, some of the perennial names we've talked about, ICICI is still, I think, my top pick that we discussed after their earnings. But in addition to that, I think what's been interesting for me, Eternal is a new name that's been popping up, just given their transformation, how they are starting to change the rapid commerce game in India. That's a very, very interesting name where I think there's some enthusiasm with respect to what the company is doing. Also, Paytm has had really, really good results, and you're seeing strength in e-commerce where India as an entire economy, I think, leads the rest of the world with respect to the digital infrastructure that's been set up. So again, there's opportunities to maybe take that technology and leverage it, not only in India, but other parts of the world too. So those are some of the names that are most exciting right now for me.
Matt, as always, pleasure speaking with you. Happy Friday and end to the week. Thanks so much for joining in.
Thank you.